Hey, Kevin here, top 100 financial advisor, best-selling author, and we are here to talk about the stock market. We have to talk about PayPal because it is not doing what I expected, it ain't doing what y'all expected, and we got some questions. So I did a little bit of research today to figure out what's really going on and whether this is something like a falling knife where people say, oh, it's cheap now, let me just buy while it's cheap and buy while it's cheap and just buy while it's cheap, and it just keeps falling down. And to give you an example of this, number one, it's down 25% in the last 6 months. That ain't good. Also, back in July, it was like end of July, when I did a short-term trade for it, I tried anyway, it was up to $310 a share. Right now, it is $189.48. That is huge, right? And what I did was, and we did a video on this, I did a short-term bracket trade where I got into it. I thought I was going to get back to that $300 level, and it did not do that. And it dropped, it hit the stop loss. I lost, I don't know, $20, $25 or whatever it was, so we didn't lose much. But thankfully I did hold on to it and get down to this level. Because if you asked me back in July, if you asked me back in August, did I think that PayPal was going to be below $200? That answer would have been hell no. I wouldn't have thought that was the case, but it is. So let's kind of break down and talk about the environment and analysis of what is the problem with PayPal, or is there a problem at all? Could this just be an overreaction for the market? Because sometimes the market don't make no sense. And I think based on the data that we have, that might actually be the case. And this could be, and I want to be very clear, could be an opportunity for the long term. So this is not something, based on what I'm seeing right now, it's not something I would try to get in and hope that it gets back to where it used to be by the end of the year. That's a huge risk. I do think 2, 3, 4 years down the line, it could make a lot of sense if you're dollar cost averaging or buying them while they're at a relative discount. So let's go ahead and talk about it. So first off, right, they were, I think this was their 52-week high, if not all-time high. But anyway, on July 26th, they were $310 per share. Today, again, they're down to $189 and some change. It's not great. However, they have some great things about the environment and the company that are going well. For example, we talked about inflation, right? And that a lot of these payment processors, I wouldn't say online retailers per se, but like Visa, MasterCard, Square, PayPal, when costs are higher and they charge a flat fee, a flat percentage, you're going to get paid more. So, you know, if something was $10 and they charge 1%, they're going to get $1. But now that $10 thing is $100, now they get $10. They don't have to do anything extra, but just sit there. The price goes up, they get more money. So that's one thing that's going in their favor. I've already talked about how well retail is doing. So if retail, whether it's a Macy's or whether it's just a mom and pop shop or something like that, or something on Amazon, and I'll get to that in a second, if these things are getting better, right, if people are spending more money, which we know they are at all these places, then PayPal should get more money from this. I don't see a reason as to why they would be falling off to the level that they are. Even if they didn't hit their estimates in the previous quarter, they weren't off by 25%. That is significant. But also check this out, and I'll put a screenshot on here as well. And I just want to just quickly read the headline. So first off, Amazon is they're partnering with Amazon, so that's already a good thing. Where basically it seems like you can buy stuff from Amazon through Venmo. Ta-da! Like, why isn't that the headline? Like, why isn't that the good news? This happened on November 8th, and it felt like nobody was talking about it. That is a huge thing. Amazon is already one of the largest retailers, period. Online, physical, whatever, however you want to put it out there, Amazon's where you want to be. So check this out, because this is also important too. A recent Venmo behavior study revealed that 65% of Venmo users said they would increase their online purchasing behavior amidst the pandemic, and 47% are interested in paying with Venmo when checking out at merchants. People want to use Venmo. Oh, don't forget, PayPal owns Venmo. So people want to use Venmo online. They want to use it at merchants, and they are expanding that. They also partner with a lot of companies that you might not know of, or you've heard of the companies, but you might not have known this at all. So I'm going to read off a few more stats. Give me 1 second as I pull this up. So first off, of the top 500 retailers in the US, they have partnerships with 75% of them already. That is a good, strong number. And it also says that other companies like Square and anybody else who's trying to enter the space, you got a behemoth, you got a monster to deal with in PayPal because they own 3 out of 4 of those relationships. That's a good thing for PayPal, but the stock is down 25%. So PayPal checkout is available across 75% of top 100 North American and European retailers, to be specific. I'll post that graphic somewhere as well. They also continue to expand and deepen relationships with their merchant network. So Walmart, let me zoom in so I can see it. Y'all should be able to see it a little bit too. So Walmart, they're partnering with Walmart, they're partnering with Booking.com, they're partnering with Fanatics, GoFundMe is for Everlane, and then they're doing some stuff with Valero and Phillips 66. That plans to go live in Q4. So right about now, I would suppose. So they've got a lot of really good things going from you're in fintech. That's supposed to be a good space to be. People are spending more online and in store, and you already have a partnership with Walmart. These things should help you. People want to spend more money with Venmo, and you own Venmo. People are investing more, and you can start to invest in Bitcoin and other stuff on Venmo. I don't get it. I do not get a real reason as to why the company should be down 25%, especially when everybody else isn't down to that degree. Like SoFi was down today. I'm pretty sure Square was down significantly today. But if I compare Square to PayPal, which if you ask me, they are basically the same. I know leadership is different, a few other things, but the companies are basically mirror images of each other. And I don't think that, I'm gonna double check here real quick, I don't think Square is down by the same percentage, or even close. So let me double check that real quick. Whereas last year, they were both like in that 200 range, 200% gain range. I think, if I remember correctly, and it was a year ago. So forgive me, feel free to go back and watch that video. But it was like, Square was up 250%, and PayPal was up like 200%. Both amazing, right? But I ended up going with Square. So let me just check with Square real quick. And let's see. Last 6 months, Square is actually up 4.5%. So you can see that like the differences are huge. You tell me you got 75% of the top 1,500 retailers. People are spending more. People want to use Venmo more, and you're partnering with Amazon that's going to launch in 2022. Why are you down 25% in just 6 months, whereas your main competitor and almost mirror image is up 4.5%, which is not impressive, but I would take the 4.5 and then be down the PayPal, down the 25%. So it's strange, it's baffling, but this tells me, right, we went through like every company, I say this all the time, every company or every stock, right? Behind every stock, behind every chart is a company. And the company seems fine. They're making money. They're still growing. Again, people are spending more. So the company is fine. This is some weird market reaction to it. So, and my son owns a stock, so I got skin in the game. He's down 17%. We did our investor call with the Investors Toolkit. Those who do the pay in full bonus, we meet every month, live and in person, and we talk about what's going on. So I actually pulled up his account and was giving some tips. And this was the only company that he was losing money on. And honestly, because especially he's 3, so he's got plenty of time for this to recover, I think we're going to hold it. I think we're going to probably actually buy some more in December, because this is when we kind of go through and check everything out. I don't see anything wrong with the company. The stock is down, but the company is fine. And usually these things tend to correct themselves. And not to say that it's going to go to 300 in a year, whenever. I can't, predict that. I don't have a crystal ball. But the company is fine. I don't see anything glaringly wrong with the company. I don't know what's going on with the stock, but I know business, right? And at the end of the day, it's going to be about a business move. It could be down the line that people realize that, oh, this partnership with Amazon is real good, and maybe it'll start to come up then. That part I'm not sure. But there's nothing wrong with the company, and because of that, I'm not going to just let it go, because this doesn't make sense. If you told me that they were struggling and they needed Pinterest, because we talked about that, they needed Pinterest to team up and be whatever it was that we were going to be, PayPal was fine without Pinterest. It's really Pinterest needs PayPal. PayPal doesn't need Pinterest. PayPal is fine. So man, it's a strange case. But again, I think this is one of those value companies where I'm not gonna call it a Tesla, I'm not gonna call it an Amazon or what have you, but I will say like this is one of those opportunities, and I would DCA this like I would normally do it, and average things out and say, look, I'll get it at 198, I'll get it at 189, and hopefully as it creeps up I'll continue to buy and just hold it for the long term, just like I did with Nike. Go back and look at those videos at Nike. I don't know where Nike is now, but I was getting it at $88 a share and continuously investing, and I'm just gonna double check Nike's share price. Nike's at 174. Nice. So we did videos about that during the height of the pandemic where everything was dropping. So that's another case of how this could work for you. But again, it took a while. So if you're looking to make money now, this is not something I would do, because it could be frustrating. And if that's not who you are, that's fine. But if you are somebody that can say, look, I can get this and hold it for a year, 2 years, 3 years, 4 years, then you're probably going to be fine if you're DCAing into it. That's dollar cost averaging, putting in the same amount on a regular basis. You might be okay. You might actually be really, really good years from now. So I just want to be clear, take a step back and say, this ain't for now, but this could be for down the line. Remember, that's really the key to investing. So if it's 2021, I'm really trying to see, especially in November, what's going to help me in 2022, 2023, if I can predict and project out that far. Again, PayPal is a strong company. I don't see anything wrong with the business. Therefore, the stock should not be as low as it is. So we are holding. I already hold Square, so I personally am not buying it. My son does own it. I do have skin in the game there, and we gonna buy some more. That's just us. Okay, so I'm gonna buy some more. We're gonna sit around, and again, he's got years, right? He's only 3, so he's gonna have more time. But again, puzzling case, nothing wrong with the business. If you got some information that I don't, feel free to let me know. But put that in the comments below. Let me know what you think. And shout out to the person who asked me about the company and my thoughts on TikTok. Now I gotta figure out how do I crunch this into, I don't know, 15 seconds to explain to other people. All right, so that is it for me. Make sure you click the link for the like and subscribe button. We are trying to grow the channel. Y'all have done amazing so far, and want to continue to help educate people about the stock market. The more you know, the better you can react. And in this case, this is a good solid reaction. Like, hey, I'm not gonna panic. I do think that the business is good. All right, that's it for me. Talk to you guys later.